Hi, I'm Doug Jones with Mortgage Magic, and I do a lot of reverse mortgage loans. And people a lot of times don't get a reverse mortgage loan because they don't get all the facts. And then when they do get the facts, sometimes they get confused because the numbers are just jumping all over the place. At least it seems to be doing that. There are basically two types of reverse mortgage loans. The one that was in the market for years and years and years was the FHA loan, called a HECM, and it's a home equity conversion mortgage. And that loan has some different rules than what we now call, I still call it the jumbo, because that's what it was called when it first came out. It's called proprietary. It means it's owned by a company, it's their rules, their product, and it's a proprietary loan. It's still a jumbo loan. But on the HECM loan, the age is 62. You gotta be 62 years old to get that loan. And on the HECM loan, there's some differences. One, they have an upfront 2% mortgage fee to begin with. Okay, so if your loan is $400,000, your house is priced for $400,000, you're gonna have an $8,000 mortgage fee up front. And then there's a 0.5% mortgage insurance fee every year. The limit on that loan is $970,800. So that's the limit. That's the limit of the loan value. So I'm not really sure if you can get a loan that size, but that is their limit that they use for their values. Okay. The other loan, now this loan can actually go to $4 million. It can go to $4 million, and it can go down to 55 years in age. There's no MI insurance, no mortgage insurance, and annual or upfront. So it could go a lot more, and this loan can have no upfront fees. This loan is certainly going to have upfront fees. This one has no upfront fees. In many cases, you're going to have the appraisal and some title fees, but there's no upfront lender fees, okay? So these loans are different. Now in California, in San Jose, where I am now, one of the most expensive towns in America, this is the popular loan because a lot of people have the houses worth a lot of money. Realize this 55 years old, the younger the person is, the less they're going to qualify for on the reverse mortgage because it's based on two things. Actually, we have two things: the age and how much equity is in the house. So you're going to have so much equity. You got to have at least 50% equity to get a loan at the 55 year. But we can determine that for you. Then you can decide whether you want the loan or not. But a lot of people are not getting the loan because they don't understand it. They don't pay attention to it. They've got some false ideas about it. They're afraid of it. And I recommend if you're interested, if you want to have a mortgage where you make no more payments, all you pay is your taxes and your insurance. And besides this, if you're selling the house in the Bay Area, moving out of the area, you're going to have a big capital gain. And you say, well, I want to leave the property to my children. Well, you're going to have a capital gain if you sell that house. Okay, so you're going to have that. You can take this loan and keep it in a trust, and if a child inherits it, the child will not have a capital gain and when they inherit that property. Now, there's some things on property 19, not getting into that now, but they will not have a capital gain. So anyway, I'm Doug Jones. Would love to do your reverse mortgage for you, and just make sure you get all the information. We'll be glad to give it to you. We've been around a long time. We're older too. So I'm 74. I qualify for reverse mortgage, and I know what it's about. Thank you.